By joining this program, all the participants have to acknowledge this. I'm repeating and I'm repeating clearly. 1. The information shared is based on mentors' personal experience and should not be considered professional financial advice. Trading involves significant risk, and participants are solely responsible for their trading decisions. 3. The mentor and the program organizers are not liable for any financial losses incurred as a result of applying the concepts taught. Number 4, attendance, assignments, and engagement will be tracked for progress, monitoring, and follow-ups. However, participation in this program does not create any formal contractual obligations between the mentor and the mentees. 5. And follow-ups. However, participation in this program does not create any formal contractual obligations between the mentor and the mentees. The last one is remember very well. As long as the markets are open, there will be something to do. However, this doesn't mean you should engage. Every day is not a trading day. You understand? I'm repeating the last point. Remember, as long as the markets are open, there will always be something to do. What I mean by something to do is there will always be an opportunity. But then you have to remember very well, stick this into your head, that not every day has a trading opportunity. Not every day is a trading day. Now, by continuing with this program, participants agree to these terms. By continuing with this program, participants agree to these terms and take full responsibility for their learning and investment activities taken on their behalf and trading actions. Whichever decisions you're going to make up after here or after this bootcamp, it is all up to you. So it is literally two things. It's either you put in the work or you put in the work. Yesterday we were having our psychology, mindset, and motivation sessions. They always happen on Sunday in the evening. And I told you guys that the top tier and the trading charter, they are winning teams. It is one force, it's a revolution, and it's for winners. So if you think that you're here and you're going to just play, please, you're in the wrong place. You understand? We only need people that are going to stick, that are going to fight, that are going to be there for themselves, as we are going to be there for you. We are going to have follow-ups, we are going to have assignments shared, but then these assignments are going to be marked. So it is upon you. If we share assignments today and you do not submit, please, it's upon you. For us, we are going to continue. You understand? At the end of it all, it is up to you. You're the one who's accountable. And I told you for the fact that God has put this onto our hearts and we are delivering. And then for the second you do not pay attention, or for the second you take us for granted, I'm not going to punish you. Mr. Wille may not punish you. Cypher may not punish you. Oblak may not punish you. But then God himself shall do his due diligence. So on this point, I just want you guys to have a consensus with us that we are not here for games, right? We are here for business. We are here to mind business, success. You understand? We are here to win. We are here to spread out the good news, to create a revolution. So, if you want to be part of the revolution, please stick, listen, understand, take notes, have a book and a paper, do the assignments. We're going to have personal follow-ups rather. And at the end of it, you need to improve as a person. Failure to do that, please, you're wasting your time. And it's not on me. It is not on anyone except for you. We all know that. So, back. This online trading bootcamp is going to have a lot more of student requirements. You understand? So, as I've told you guys that today we are going to be talking about the bootcamp. Today is the grand opening. I'm I'm so sorry if I've already pissed people off at the grand opening, but then this is it. So if you're not willing to move with the standards, you have to move with the standards. That's what I'm trying to put across, right? So this online trading bootcamp is going to have student requirements, and then these students are going to have these things. You're required to have these things to ensure that all participants get the most out of this bootcamp. Please review the following requirements before. Is everyone seeing it? Is everyone seeing the student requirements list? Is everyone seeing it? Some hands up, some thumbs up. All right, so that's great. That's great. So I hope everybody is seeing that. Now, point is here. To ensure that all participants get most out of this bootcamp, please review this following requirement list. One is technical requirements. Point one, a stable internet connection. That's no bargaining. We're not bargaining with that. You understand? For the fact that you have attended today, we believe that you could attend the following sessions. So you need to have a stable internet connection. You understand? Point two, you must have a laptop or a desktop computer preferred, or a tablet with a large screen. But in this case, we're not going to chase you guys away. You understand? For those guys that are using phones, it's totally okay. But then you have to at least tilt your phone. Now we're using solutions here. Tilt your phone to have a maximum view. Are you guys understanding? Right? Yes? Have you guys understood? For those guys that are using phones, maximize your screen by adjusting. Tilt your phone, adjust your screen. But then preferably, if you have a laptop, a PC, a desktop, thank you. The next point, a functional microphone and webcam. Optional but recommended for engagement in discussions. So this is provided actually by Google Meets. So the microphone is down there just in case you need to say out something. You put your hand up, then we shall see it. You understand? Then you shall tap the microphone, unmute it, speak. After speaking, mute it, please. We do not want distractions. Point 4, access to Google Meet for live sessions. You must have access to Google Meet. And these links are going to be shared in the groups and personally. We are going to send them to you always. A TradingView account. You must have a TradingView account, at least for making analysis and chart exercises. You can either subscribe for the free version or the premium version. It's up to you. We're not here for that. But then it's up to you. If you want to pay for the premium, pay. It's well and good. For the chart exercises, that is what we are going to require you guys to have. TradingView. A demo trading account with a reliable broker. Optional but encouraged for practice. You understand? For the broker, if you do not have a broker that you're using, I would like to share you a broker that I know that works so well. So after here, you text me, I send you a brokerage company. I'm going to send you the link that you could use to open up a demo account with them. You understand? Then in case of depositing real live accounts, I would suggest that you use them because they have bonuses. So that is it. After here, you text me so that I could give you that link. That is the technical. That's the technical aspect. So we are going to knowledge and preparation. So point 2 is knowledge and preparation. Basic understanding of financial markets. Recommended but not required. So you must know at least what is going on, or you must have known, at least you must have had something about the financial markets, right? Point two, willingness to learn ICT, inner circle trader trading concepts. That's the strategy we are using. And if you feel like you're already trading with a certain strategy that you trust 100%, please, I literally do not know how to help you, but then for us, we are going to be using ICT. And just not to confuse you, just not to make you confused about everything that is going to be going on, please and please, it's either you adjust to what we are going to teach or you find out your way, because we are going to be using ICT concepts. That's our strategy. Point three, familiarity with using a computer for research and analysis. We need you to have skills that enable you to use a computer for research and analysis. Point four, completion of any pre-course reading materials or videos provided. What we are trying to mean here is we are going to be sharing assignments and exercises to you guys, and we require you guys to do them effectively, proficiently. And these assignments are going to be submitted to me or Mr. Willie, maybe or Black and Cypher. So you send these assignments and then we are going to mark you guys. Last week I marked some guys and they've improved, and the way they are chatting is so nice. The way they are making analysis is so nice. Just in 3 weeks, they are making super clean analysis. So how about if you, on a personal basis, you do the assignments and then send them, and we see how you could improve. Please, if you aren't sending them in, please submit those assignments and they are going to be shared. And then the other thing is the videos are going to be provided on our Trading Chatter YouTube channel. So you could go to our YouTube channel. There's a video for Friday market execution, for Friday lectures. The Friday lecture is there on the Trading Chatter YouTube channel. So you could go there, search for the Trading Chatter. You would see the execution. It's Friday execution and it's there. So that's the point on knowledge and preparation. So, and you can see the copyright is there, so this can't be copied by anyone. Point three, participation and engagement. Active participation in discussions and chat exercises. This is required. Whenever we are going to have sessions like this, I need you guys to be engaging. We are going to ask questions and we need answers. If we are going to be explaining anything, please and please endeavor to, at least if we ask, have you understood? Come up and tell us, yes, I've understood and I've understood this and this. That's the reason why that microphone is there for everybody to speak. You understand? And we are not here because we are fearless. No, we are here because we can speak for ourselves. So please put down the shy self and come up and speak. At least for some reason nobody is watching you. So pull up that microphone and speak. If at all you need something to say, if at all you need a question to ask. Have you understood? So for those that have just joined in, we are talking about all the things that are going to happen in the bootcamp. The student requirements, we've started from up here. This is our disclaimer. If you can see it, that's our disclaimer. And I've gone through it. For those that haven't read it, I'm going to share it in the group. You understand? I'm going to share it in the group. You'll read it from there. So that's the disclaimer. So after the disclaimer, we've come to student requirements. These are the requirements we need you to have as a student. And these are non-negotiable. Although I can't see you, although what, but then at least you have to have them for your own good. These things are not going to, okay, they're going to help us, but then they're also going to help you. So how about you help yourself by doing these things? Have these requirements. The technical requirements are there. Then the knowledge and preparation. The knowledge and preparation is also there. So I need you guys to prepare yourselves, right? And I've also explained the knowledge and preparation. We are going to be sharing exercises. I need you guys to be doing these exercises. Submit them. We are going to mark them. We are going to have our videos posted on YouTube. of the lectures that we are going to be talking about, of which this video itself or this lecture is going to be shared. You understand? This lecture is going to be shared. So I would like to go to the next point, and that is point 3, participation and engagement. Active participation in these discussions and chat exercises is crucial. So it is crucial for everybody. It is crucial for everybody. So we need you guys to participate. You understand? Failure to participate, it's on you. It's not going to have an effect on us. No, it's going to have an effect on you. So if you have any question, there's a microphone down there. Put up your hand. We are going to see the hand, and yeah, tell us what you're thinking. Tell us the question. Commitment to attending all live sessions or watching the recorded sessions if unavailable to attend. So just in case you're unavailable to attend these sessions, the sessions are going to be where? The sessions are going to be live on YouTube. You could go there. We posted the Friday lecture there. The Friday lecture is there, and you could go and watch it. So all the preceding lectures are going to be posted there, and I do not want you guys to miss them. Completion of assigned trading exercises and homework. This is recommended to everybody. To everybody. Completion of assigned trading exercises and homework. So if at all there are any assignments that are shared, please and please endeavor to do these assignments and submit them in time. In time. We do not have time. If I tell you guys to analyze for me New York session of today, please analyze it quick. You submit it, we mark, so that tomorrow we're analyzing something else. Not again telling you guys analyze for me this today, then again you submit it tomorrow. It doesn't make sense, you understand? So do these. The fourth point is engagement in group discussions and willingness to ask questions. So back in the group, we are going to have voice chats, random voice chats. So you always want to check in what's going on in the group, greet people, post something, you understand? Post what you're seeing, ask questions, you understand? Ask questions. So these are all things that we are going to need you guys to do. These are all things that we are going to need you guys to do. Point 4, time commitment. Time commitment. Point 4, allocate at least 5 to 7 hours per week for live sessions, self-study and practice. Be prepared to review and analyze market charts outside of class hours. Now this is your personal commitment. How committed are you? You understand? This is going to help you and not me. How committed are you? And we are telling you at least, if I told you the lazy guy, please just commit 5 to 7 hours per week for these live sessions. Go back and rewatch them. If at all you haven't understood anything, they are always going to be there on YouTube. Self-study, check out all these concepts, go and research more and practice. Be prepared to review and analyze market charts outside class hours. Whenever we finish teaching anything, please go and look for these concepts in the chat. Go and mark out these things. They are there and they are working. So the only point is that you have to put in the time. That is the commitment that is required from you by the trading charter and the charts themselves, because there's no way you're going to get successful if you do not put in the time. There's no way. 100%, you're just gambling with yourself. Point 5, mindset and attitude. A growth mindset with patience and discipline. We always talk about mindset and motivation and psychology on Sunday evenings. Sunday evenings, before Monday opens, we are talking about mindset, attitude, psychology, and motivation of a trader. So you're here aspiring to have one of the greatest careers, one of the greatest jobs, one of the greatest skills. And one thing I could tell you is there's a certain mindset, there's a certain attitude, there's a certain psychology that you must have as a person. And this psychology is learned. It is not a talent, it is learned. And then I do not want you guys to miss those Sunday lectures, because we are talking about mindset, we're talking about psychology, motivation, and attitude. You have to grow your mindset with patience and discipline. The second thing is you have to have a willingness to apply the concepts in real-time market conditions. Go and practice these things so that at least try to trade in a live market condition whereby you could apply these contents or these concepts that we are going to be sharing. We need you guys to be open-minded to constructive feedback and continuous improvement. We need you guys to always give us feedback. Where we've gone wrong, give us feedback. Where we've gone right, give us feedback. Because where you've gone wrong, we're going to give you feedback. So failure to do this, we are all failing ourselves. If you do not tell me that, okay, improve here, maybe improve the sound, improve the software we are using, then we are going to fail ourselves if you do not tell me that. Same, if I do not tell you to do something, if I do not tell you to correct something, then I'm going to fail you. Resilience to handle the challenges of trading without emotional decision making. We can know, and we know that the financial markets are ruthless. The financial markets are not here to play. They're not here to play. They're not here for you to gamble in them. They're not here for you to bet in them. So anything concerning your emotional decisions, please, any emotional decision that is not backed by confirmed knowledge or confirmed strategies and concepts, please and please and please handle them. Handle those challenges on a personal level. There's no way I'm going to teach you how to handle your emotions. Handle that. Handle that. Point 6. Additional recommendations. A notebook for taking notes during sessions. A notebook for taking notes during sessions. I need you guys to have a notebook, a book, not even a paper. We need you guys to have a notebook. Why? Why a notebook? A notebook can't get lost. It can get stolen, but it can't get lost, right? But then a piece of paper, if you're going to summarize whatever we're going to talk on a piece of paper, that piece of paper can be used for anything. That piece of paper can fly away. That piece of paper can get lost. But then if you're having a notebook, that is much more better. That is much more concise, and it would help you keep these notes well. Yes, I'm seeing Hillary is telling us that he's having a Word document where he notes his notes. That is good. That is good. We appreciate. So, we need you guys to have headphones for better audio clarity. We need you guys to have headphones for better audio quality. Headphones for better audio quality. So we've said these are the additional recommendations. We need you guys to have a notebook for taking notes during sessions. We need you guys to have headphones for better audio quality. Now it depends to you as a person. Sometimes you may be in a noisy place and you may need these earphones or headsets. Who knows? Joining the mentorships online group, WhatsApp, Telegram. If you're not in our groups, please and please endeavor to text me after here. I do not know how you've joined, but endeavor to text me after here, because I personally am the one that has shared the links in our groups and personally to each of you guys. So if at all you're here and you do not have my contact, text me. I'm going to add you in these groups. We have a WhatsApp group and a Telegram group for additional discussions and support. That is why these groups are there. Please and please and please listen to me and listen to me well. While in these groups, do not post your investment schemes. The second you do that mistake, that's the second you're out of that group. I'm telling you, and I'm telling you well. We are not here to play. We are here for business. The second I find anyone posting any investment schemes or what that is nonsense to the group, please and please, I'm removing you from that group, and that is the end of you. Following financial news and economic events that impact the forex market and any other financial markets. Now this I'm going to teach you guys, and I'm going to show you how to do it. And all these rights are reserved at the trading charter. So this information is copyrighted. Finding it anywhere that is not our sources is prohibited. And this is it. I would like to welcome those that have just joined us, and I would like to inform you guys that we've been going through some. I would like to welcome you guys that have just joined us, and we've been going through some introduction here about what you guys have to do as students. And we started with a disclaimer. So I've already passed through this, I've explained it very well, so I'm literally not going to repeat myself, but let me just scroll so that you could see this. So this is the disclaimer. This mentorship program is designed for educational purposes only and does not constitute financial, investment, or trading advice. Participation in this program does not guarantee any specific outcomes, profits, or success in trading. But then if you utilize all the knowledge that is going to be shared here, it's all on you. Go there, make it. These things have worked. They've worked for us. They've worked for other people, and we believe they can work for you guys. By joining this program, participants acknowledge that the information shared is based on the mentor's personal experience and should not be considered professional financial advice. Trading involves significant risk, and participants are solely responsible for their trading decisions. The mentor and program organizers are not liable for any financial losses incurred as a result of applying concepts taught. These concepts work, and go and apply them correctly. Do not use them to misbehave in the financial markets, but use them to apply them as applied knowledge that is going to help you in turn. Attendance, assignments, and engagement will be tracked for progress, monitoring, and follow-ups. However, participation in this program does not create any formal contractual obligations between the mentor and mentees. And follow-ups, however, participation in this program does not create any formal contractual obligations between mentor and mentees. Remember, as long as the markets are open, there will be something to do, and there will be opportunities. However, this doesn't mean that you should engage. Not every day is a trading day, and not every trade must be taken. That's called discipline. In conclusion, by continuing with this program, participants agree to these terms and full responsibility for their learning and investment activities taken on their behalf and trading actions. All rights reserved. 2025 copyright the trading charter. So thank you so much. I've given you guys a total breakdown about the disclaimer and all the things you must be expecting. The technical part that you have to have, the requirements that you must have all been stipulated. So now it is upon you. You either do the right thing or you mess up. But then I told you guys yesterday that attended the lecture, the mindset, psychology, attitude, and motivational lectures that are always there every Sunday. I told you guys that in a few years from now, I do not know, I don't want to say 2, I don't want to say 1, we are going to be meeting, literally. Somehow, we shall be meeting. And then most of you guys are going to have made it. But then, do you want to be that person that attended all of this and never made it? No, 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 no. Please and please, we're not having that room here. We're not having any room for anybody to attend all this and then still flop. No, we don't have that. So please and please, all I need you guys to do is put in the time. Put in the time. Put in the time. The win is coming for everybody. Don't mind about the win. Do not even think about the money. Think about the knowledge. Because with great knowledge comes great power. With great knowledge comes the money. So why do you want to think about the money? So I want you guys to have all of this in mind. Have all of this in mind. Now, not to waste time, let me give you guys a breakdown of how we are going to present. Thing is like this. Today is the grand opening and we've thanked God first. That was first on our agenda. Then we had the introduction. Then we've described for you the disclaimer, the requirements that you must have and everything. And then the next point is, how are we going to deliver this information? The thing is this. At the trading charter, we are having 2 lectures. We have the first lecture that's always there at 10 a.m. 10 a.m. I need you guys to mark that. 10 a.m. to 11:30. And this lecture is basically for beginners. That's the beginners lecture. 10 a.m. to 11:30. Now I know there are people that are going to be like, we may not be able to make it. What time? I'm always at school, I'm at work. No, we've got you covered, but then it doesn't mean that you do not have to attend. There's a personal touch when you attend. So the videos or the lectures are going to be recorded and posted on our YouTube channel, which is the Trading Chatter. The Trading Chatter. All the lectures are going to be recorded and posted there. Then the second lecture is always there every day in the evening, 7:30 to 9:30. 7:30 to 9:30. Those are 2 hours. And this is the lecture, the evening lecture. And this evening lecture is always going to be for the advanced students and intermediates. So if you feel like you've progressed from being a beginner, something like that, you could come and attend. But then I'm not saying that beginners cannot attend this. No, you are free and you're most welcome to attend. You are most welcome to attend the evening lectures that are for the advanced students and intermediates. Why? Because when you attend them, you get to learn more. Do not sit on your back to be like, hey, I'm a beginner and I do not have to be in the advanced class. Please and please endeavor to attend if you have that time. Look for the link. The link is always shared in the group, and personally I share them to everybody. So figure out, if you're free as a beginner, you could also attend the beginners class. Rather, if you're free as an advanced student, you could also attend the what? Beginners class. So now the first lecture is from 10 a.m. to 11:30. That's for beginners. The advanced and intermediate lectures are from 7:30 to 9:30 p.m. in the evening. Now, this is how it's going to be presented. In the morning, we are going to present the morning lecture, I personally, and Cypher. Cypher, you came late, we were doing introduction and you never did because you weren't around. Would you mind introducing yourself?
Yes, hello everyone.
Yes, hello.
Hopefully you guys are picking me.
Yes.
Yeah, I was a little bit caught up, but then I endeavored to try and show up. Yeah, my name is again Emmanuel, though because for popularity people call me Cypher. I decided instead of again I go with Cypher Emmanuel. I'll be helping Alvin with beginner classes, the ones that are 10 a.m. Yeah, but hopefully I see many of you guys there. Thank you.
Alright, thank you so much, Cypher. So that's Cypher for you. So we handle the morning classes, I and Cypher. So we share them. That's for the morning sessions, which are the beginner sessions. Then the evening sessions are going to be handled by me personally, Alvin Onen, Mr. Willie, and Oblak shall also help us. So now that is it. So endeavor as a person to figure out where you fall, right? Text me and be like, this is where I fall. I'm a beginner. You need to reach me because me, I do not know how basically you've been. Possibly you're new to trading and you need to know what is trading literally. So what we are going to do is this. You're going to text me personally, tell me that you're a beginner so that I could know that, okay, this person doesn't have to miss. This person does not have to miss these lectures for beginners. And please, after we feel like you have understood, we shall advance you now to the advanced lectures. But then still I've told you guys, if you feel like you're a beginner and you have time, attend the beginners session and attend the advanced session. It is going to help you to learn these things very fast. You understand? The next thing is the advanced classes are there at 7:30 p.m. in the evening to 9:30 p.m. and are going to be presented by me, Mr. Willie and Oblak. And then what is going to happen here is, if at all you're a beginner, you could also still attend the advanced classes. Same to the advanced guys and intermediates. If you feel like you have time, you could still attend the morning lectures that are for beginners. So that is it. So I would like to see you guys tomorrow. Those that are beginners, text me after this so that we could plan for tomorrow. Tomorrow at exactly 10 a.m. we are going to have the session and I would like to see you guys there. So as I told you guys yesterday that today is going to be the grand opening for the bootcamp, March 17th from 7:30 p.m. to 9:30 p.m. and today is the day. Today is the day, and I told you guys that we are going to pop we are going to pop some champagne. You understand? So I told you guys that I do not know whether you guys came with some champagne. The word is even so weird. I doubt whether you guys have champagne with you guys. But literally, I told you guys that yeah, if you have some water, please, you could use water. Water is very healthy. It is 100% affordable by everybody. So yeah, you could use water. So for those that can afford soda, for those that can afford any beverage, yeah, let's take a chance and just celebrate this, because this is a revolution that has been started. And please endeavor to show up. Failure to show up, it's not me that is going to, you know, no, for us, we know all this. We are trying to help you guys. So you have to help yourself. And how can you help yourself? The only way you can help yourself is by doing what? By attending. You just have to attend the lectures. That's the only thing you could do for yourself. That is the only thing you have to do for yourself, literally. So this is what I want you guys to do. Please and please, secretly, do not show us. Just, if you're taking water, take. If you're also not going to do anything, please, I know you're celebrating inside your heart, but then this is something great. I do not know whether you guys know. It has taken people sleepless nights to pile these notes. I'm telling you guys, we've had sleepless nights to present this to you guys. It is a work of art. So appreciate it, and appreciate it. Please and please. I don't know how I can stress this, but then I need you guys to appreciate this, because we haven't wasted our time for no reason. So now, this is it. Today we are going to, Alright, so I'm done with the introduction and everything. So as I told you guys that, so this is it for those that have just come. So this is the disclaimer here. The copyright is there down. Do not play with it. Please, it is reserved. Any infringement on it may lead to difficult actions. So that is the student requirements. Technical requirements are there. The knowledge and preparation that are needed. Everything that you need is there. So at this juncture, I would like to invite Mr. Willie to take on with the presentation for today's. Now, this is it. He's going to show you whatever we're going to talk about. He's going to give you an outlay of the notes that we've piled. I hope you guys are understanding. Now here, I want you guys to pay attention. Please, if you're planning to move around, I don't know, because you're going to miss. This is now the sweetest part. We are done with the boring part. Now we're going to the business part, right? We are going to the presentation where we are showing you guys whatever is going to be cooking. So please and please, you do not want to miss this. This is the most interesting mentorship you'll ever find. There's nobody in Uganda, there's nobody that is going to teach you this like this. I do not want to call this for free. Please, it is not for free. You understand? But there's nobody who's going to give you this information like this package, all the effort. That's why I need you guys to celebrate this. So please and please, pay attention. Do not move around. Focus. If you're not listening, please reach out and tell me that you're not hearing, so that we could see how we could fix it. If you're not seeing a thing, I hope all you guys are seeing the chat in front. You're seeing are you seeing the presentations? Thumbs up, thumbs up, thumbs up, thumbs up. That's great, that's great. Alright, that's nice, that's nice. That's nice. Okay, so alright, Mr. Will is still organizing himself to come. So just prepare yourselves. By the way, get a pen and a paper, pen and a book rather, because he's now coming to present what you should be expecting. Get a pen and a book, pen and a book, pen and a book. Whatever he's going to talk about is just going to blow your mind. So you do not want to waste your time. You do not want to waste your time, right? For those that have just come, we've already presented. The disclaimer is here in front. This mentorship program is designed for educational purposes only and does not constitute financial investment or trading advice. Participation in this program does not guarantee any specific outcomes, profits, or success in trading. But then if you put in your time, if you put in your energy, if you do the homeworks, if you show up every day, if you put in the man, just know you're gonna make it. So at the end of it all, it's up to you. It is up to you. All we want to see from you guys is elevate. You guys need to get elevated. I do not want to see you guys the same way we found you. Today, at least move away with a bag of knowledge. Literally move away with a bag of knowledge. This is work that we've piled sleepless nights tirelessly just for you guys. So please and please organize yourselves. Get a pen and a paper. Get a pen and a book, not a paper. So right now, I literally let on Mr. Willie to present. I've done my part. So people, do not over move. Do not over move.
Hello everyone. I hope everyone is feeling fine and feeling motivated. I will thank the previous speaker, Alvin, for making the introduction, reminding you of the expectation, and also reminding you of the most important thing is putting in the work. Whatever we're going to discuss is going to be fully educational, and you might know some, but we're starting it from the beginning where it all started. So I hope everyone has a pen or something like that close to them. Okay. Okay, so I think I'm going to use trading view for this. But by the way, also the notes, the PDFs will be shared in the group for review or via email. I think we'll use email this time around, or drop it on the Google Drive, and then we'll share at once. Also, please take note that we're recording the program. Everything is recorded, and all your attendance is going to be captured, so we'll be notifying you, calling you to check on your progress. So if you see a random call, please don't hesitate to pick it up. Might be one of us trying to check on your progress. Okay, let me preview this. So all right, so this is the chart of market chart of Nasdaq, but under trading view. So I'm going to remove all this and then start afresh. All right. So there are two things that move the market. The history I'll provide it tomorrow. So today, since we've had a long talk since the beginning with Alvin, I'm not going to take you back in the history of where this all began. Whereby some days back in the day, people used to trade the financial markets on paper. They used to write down the charts on paper, submitting their entries and money on paper, and then they wait for a week, for a day, for days to get results. But these days, since the introduction of computers and some mathematics, things have been automated. So for the computer, so what I want you to understand is that let me refresh this. I'm trying to type, but I'm not seeing anything. Okay, try to refresh the page. Okay. So computers. All right. I hope everyone can see this clearly. So computers understand two things. You need to give them instructions, right? For them to give you results, right? So for a computer to give you results, this is our machine here. You need to give it instructions. Instruction is considered input. So you need to instruct it by entering something inside it.
Oh, wait, no, here.
Sorry for that. So let me just continue because people are waiting. Okay. All right, let me continue. The PDFs are already done, but they're in a different account, and this is not my account. It's for Alvin. So it's just giving me issues to do what. Anyway. So for the computer to give you an output, you need to do what? To give it, to enter some instruction. Then it will give you an output. An output. Like so. So this is some basic information from maybe high school that we all understand. Because there's a saying that computers are always dumb. Calling it dumb or dumb, they are trying to mean that they need instructions. Without human instructions, they can't do anything, so they wait for you. But these days we have AI, what is known as artificial intelligence, that can automate things, and then without any human intervention, the computer will do work or complete tasks, etc. So back then, market makers used to flood money into the markets, but these days it's done by computer algorithms. Computer what? Algorithms. So an algorithm is like a code. An algorithm is a series of input. That series of input, I'm meaning this that is entered into a machine, in this case a computer, and then you expect to see some results as output. So how does this connect to markets and the charts and trading? So a precise set of step-by-step instructions, all rules designed to solve specific problems to accomplish a particular task, that is called an algorithm or a set of instructions. In this case, normally, if you know some programming, there are codes we write. If you're using Java, C#, etc., or JavaScript or Python, the code that you write as a set of instructions, that is what we call an algorithm. So it can be an instruction to trigger a certain alarm, maybe to wake you at maybe 7 a.m. o'clock. And then at exactly 7 o'clock, the computer will trigger that, and then it will sound an alarm. So something like that is what I'm trying to mean. So what does an algorithm do? An algorithm manipulates price to induce liquidity into the marketplace by playing on human behavior. This is what I'm trying to mean. The way machines were designed. The way this code plays on us by playing on us by checking our fear, that is one. Checking our greed, and you all know that greed is one of the common issues. Impulsiveness, kind of like reaction. Eh? Then lastly is FOMO. FOMO, some of you know this. FOMO means fear of missing out. We've all had this. So these four aspects, the code that was developed plays on us by checking us in these four aspects. Impulsiveness, the fear, you know we all have fear. Greed, you're like you want to take it all, as if the market will not open up tomorrow and the following day and the following week and the following year. So all these four aspects all these four aspects that are highlighted with an orange hue is what the algorithm based on to manipulate you or manipulate the market. Alright, so we continue. So now this is how it works. There are two inputs that we base on. Two inputs, input one there's someone who wants to join. Input 1 and input 2 that enters into the machine. So let me remove this. And input 2 that enters into the computer. And then we expect what? An output. So the first input for this algorithm to work is time. Then the second one is price. So there are two things that enter into the machine. Time and what? And price. Now the computer uses those two to give you an output. So at a certain time, so this specifies how the inputs are mapped to specific outputs in a macro. So now how does the output appear? So these are the two things I'm talking about as an input. Now right now in TradingView, now I want you to look at this. Let me use this arrow. I think you can all see this. Now on the y-axis, here you can see price. If you're trading, maybe for example this chart is for XAU, which is gold. On the right hand side you're seeing price, and then down here this is time. So those are the two things that are read by the machine to give you results. So we have time entered into the machine and then price alongside the y-axis presented that way. Okay, so Alvin has sent me the PDF. Let me download it. Oh, this is taking more than I expected. Okay. So we continue. Okay, so the output bases on two things. Inefficiency. Inefficiency. Then highs and lows. I hope you've heard of this. Highs or lows of the market. Now the highs and lows are like this. You've seen this. Market goes up, down, up, down, up, down, up, down, up, down, like that. So these levels are what we call, let me increase this so that you can all see clear. These levels, this is a low, we have lows. Those are the ones that I'm marking with red. And then highs, levels like so. So the highs, let me mark them with blue or green. Let me see, blue. Yeah, with blue. So these will be our highs and lows. So the algorithm will trigger that, give you output to target these levels, the highs, the key highs, and then the key lows. And then lows. You've heard of higher highs, lower lows, such levels. So that's what I'm trying to mean. So now when the output comes out at a certain time, you expect price to reach somewhere where it's either an inefficiency, to look for an inefficiency, or to look for these key levels, highs or lows, higher highs, lower lows, whatever, where you call what you call liquidity levels. People know somewhere SMT or ICT. They are normally called liquidity levels. So price will attack this. The reason why I started with time and price is that there are two variables that the computer understands: time and then price. So the computer will read that and then manipulate it to give you an output that will either target an inefficiency. An inefficiency means imbalance. 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 An inefficiency means imbalance, something that is out of balance, which you term as fair value gaps, inverse fair value gaps, or such levels. So now we know that price will either target inefficiency gaps or key highs and key lows. So what are the key highs and key lows? We've talked about those. These steps, now for example here we have gold that was climbing up the mountain. You can see this. You can all see that. So when we try to draw this, market started there, then went up, came back down, made another high, came back down, made a lower high, whatever, made another high, a lower level, high, low, high, low, high, low, high, low, high, low, like that, you get. So those levels, those are what we call lower lows or higher highs. So the price will always target these levels first. You get. Now the other point is the inefficiencies. What are inefficiencies now? We've already now discussed key levels of highs and lows. We all know that now. These ones, these points you're seeing, these ones, these ones, these ones, those points, those are like highs or lows. If it's not going to target that, it will target what we've called inefficiency what? Levels. And what are these? This is whereby price did not balance it and it's coming back to balance up that gap, which we call fair value. Fair value. So there are two things I want to rectify here. In a marketplace, the way you're seeing the market going up and down, going up and down, coming down, going up and down, things like that, fluctuations of market prices, price levels, it's either attacking key highs or key lows, levels of liquidity, or it's going to look for unbalanced people who are not paid in full to come back and clear their debts. For example, you go to a shop and then you borrow a kilo of sugar. You borrow a kilo of what? A kilo of sugar. You take it at you go to a shop. Sorry about that. You go to a shop. You borrow a kilo of sugar. Maybe it is at 4K, and you don't pay anything, but you promise to pay the guy back his money maybe at a later date. And then after 2 days, you bring back the money. So the price will be like this. This is what I'm meaning about fair value. It will be, you come here, goes up, comes back down, goes back down, comes back up. Then, when you borrow money, when you borrow a kilo of sugar, you've left your debt. You're in debt. You're indebted by the shopkeeper or the retail personnel. And then you promise them to pay back the full amount at a certain date, maybe on Tuesday you're going to clear the debt. So you bring back the money. That's when price now comes back to that gap, and then it will live until it's paid. So that gap the debt you've left to the shopkeeper, it's what we call an inefficiency or an imbalance. So price will continue up, but when it left a gap, there are some people that were not cleared, and it has to come back at any time to clear or to pay off that debt. I hope this is clear to you. Now we have some examples of gaps or imbalances. There is another example that I will give. You go back to the shop, but this time you're not taking a kilo of sugar at 0 pay. You're going to pay, a kilo is at 4K, but you're willing to pay half the payment. You pay 2K. Now the retail attendant gives you the kilo of sugar, and you very well know that you have to bring back the other half, which is the 2K, to clear the balance. So you take the kilo of sugar, you enjoy it at home with your family. Now Tuesday comes in, and then you're like, let me go back and pay this guy his balance. You get? So now we've seen now those are two types of imbalances. So let's look at them. So this takes us to fair value what? Fair value gaps. Fair value. So fair value is like now you're paying back that gap that you left, that inefficiency that you left, that debt that you didn't clear. You're like, you didn't pay fees last time, but now you're willing to pay back the money because you've got the money. But time has passed. You get, time continuously moves on. But price will come back to those levels that we are not clear to pay them back. You get? Let me see a thumbs up if whatever I'm discussing makes sense, people. If you're getting what I'm trying to mean, you can raise, maybe give me a thumbs up, something like that. If I'm not making sense, you're free to ask. I'll repeat for you. So what have we talked about? Two things. The the machine or the algorithm expects to input price. Price is the amount of any asset you're going to trade in the marketplace, and then the time at which it will be traded. So those two variables are entered into the algorithm, and the algorithm will deliver the results or the output in two ways. It will deliver the output at either a certain key level, which is known as a high, or a low. Whatever you call lower lows, higher highs, such levels, that's what I'm trying to mean. If not that, it will try to balance up people that were not cleared. Eh? You get? We've seen supermarkets, because this is like daily routine. You see supermarkets and these other wholesale traders, they have commodities from different uh, resellers, like from different companies, like Coca-Cola, what those trucks that bring soda. They give you soda and water, etc., and drinks or beverages on credit. But since you're doing wholesale, when you sell the products, you can pay them back at a later date. You get? So that inefficiency, the moment you clear the debt, that's when price comes back and then leaves. You get? So those inefficiencies, so price moves in this way. It's either targeting key highs or key lows, key levels like highs and lows, or trying to balance up those gaps. Now the gaps is what we call, after clearing the debts, it's what we call delivering price at fair value. Everyone has to be paid at 50, 50, 50. You get. Okay, so let's continue now. Back here. So we have to, how do you determine a fair value gap? It's made by candles. I hope you all know what a candle is. So to people who know this, it's like I'm wasting your time, but we promise to take back this from the start. For example, you have green candles. You have green candles. So for a gap to be created, you have to have three patterns, three candle, I hope you're taking notes, candle patterns in play. So you know a candle has a wick. We all know this, that candles have wicks. Wicks, those are like lines protruding from the what? From the body. So this is our example of a candlestick. The name was borrowed from these normal candles. Eh? Remember, a candle has a wick, which by the wick that you light up with a matchbox, and then you're provided with light. So we have candles that go up and candles that go down. The candles that go down are colored differently, or we call them down close candles, or bearish candles. Eh? Now, when you hear the term bearish, that just just know that the market is going down, and we have candles that represent that. All this is visual. The candles that go up are normally colored green. So, for example, this one that I have illustrated for you here. This one. Now, this is what we mean by a three candle pattern. So we have the first candle, and then the second candle, and then the third candle. So those are our three candles. They are climbing up the hill. So the market is bullish. It's going up. So how do we determine that there's people who are not paid? Eh? This is how you see this gap. If this is the first candle, the first candle, candle 1, candle 2, then candle 3, then candle 3. So in the middle here, where you're seeing the wicks, here, from the first candle to the third candle, the second candle in the middle is what determines whether it was cleared or not. That gap, the body, is what we label. So let me use a box to label that gap from this wick of the third candle to the wick of the second candle. Let me change the color to maybe orange. So that gap that was left untapped, unbalanced, it's what we call the fair value gap, or the inefficiency. Inefficiency gap. So this is the gap whereby you paid off some money, like to take you back to our example of a kilo of sugar, you paid off like 2K. Where is the 2K? The 2K is now this gap. Let me mark this with maybe purple. Is that gap whereby this candle, the third candle, came back down and tapped halfway, almost halfway of this candle, the second candle, and then continued up. You get, at least you paid off some debt, but there's a gap that wasn't cleared. You understand? That's the 2K now you take back. Or if you bought maybe bread and it's 5K, you pay like, you deposit maybe 3K, and then they are demanding you now 2K as balance. You have to bring that back, that money at a later date. You get. So that is what I'm trying to mean. So that is our first example of a fair value gap. Okay. Now the second example. The second example of a gap. For example, the other gap that I talked about, whereby you just take a kilo of sugar and you don't pay anything at the start, but you promise to pay back the full amount at a later date. You get. So error is also made by 3 candle patterns. Let me duplicate this. I hope everyone is getting something. So this is the beginning of everything. If you have any questions, you can raise your hand. We'll be glad to answer you. So still on our example of a bullish market. Now you're seeing these 3 candles again. Candle 1, candle number 2, 1. Candle 3. Now you're seeing the first candle is here, and then the second candle in the middle, and then the third. We said for the gap to be left, there has to be 3 candles in play, following each other. Now, where is that gap? It's here. This one that I'm marking with what? That is a physical gap whereby nothing was paid. You get nothing at all. Nobody is touching that, just a gap. So this is whereby this is called a void. A void, it's like space. This is a void or a gap that was skipped. Now this is more stronger than the first one in the first example. So these are called fair value gaps because whenever price comes back to them, it's providing fair value to the retailers or to the people who are participating in the market. So things are supposed to be covered up. No one should be left unclear. You get. So such gaps are always more strong than this one, in the first example. So taking you back slightly, you are going also to look at the real charts and try to look for these key levels to these fair value gaps that we talked about. Alright, we've seen that there are two things that happen. Time and price. These are our two variables, the x and y. So time is our x, what we call the x-axis. That's why you're seeing on the x-axis down here you're seeing time, and then on the y-axis you're seeing price. Where is the y-axis in trading view? It's this. It's price. It's maybe in US dollars, etc. That's that. For the x is down here, time. So price moves alongside time. So that's what we've been looking about. Now let me change this to candlesticks. So this is our chart of gold. Sorry, the candles are in black and white. Let me change that to maybe green for colors, symbols. Good. Okay, I think that will work. So the green candles, those are the ones that are going up, and those ones that are going down, those are the black candles. Now, for example, here we've said price attacks two things. Key highs, that is a key high, key low, high, low, high. You get another low, another high, another low, another high, another low, another high. If not those levels, we've said it attacks inefficiencies. What are inefficiencies? These are gaps left between three candles. How do you spot those? By looking at three candle patterns, and in the middle, the candle in the middle, whenever you see that it is not covered, what do we mean by not covered or covered? Let me zoom in here. Let me remove these lines. Now, for example, in this example, you're seeing candles going up and down. There is this, how do I mark this? There is these down close candles, the black ones. You're seeing those? Everything was almost covered. You can see all that. You're seeing the wicks. Let me reduce the opacity of this. You're seeing the wicks. So we have this, we have that. So all the wicks are almost covering up. Let me zoom in so that you can see that. Are almost covering up each candle's body, each new candle that forms. But now let's look at the candle that goes up. This one, the green candle. So we're having this. Remove that. We have this. So that will be our first candle that I've labeled with red. And then we have the second candle in the middle, which is green. This one. Then we're having also the third candle, this. So what was left in the middle, a fair value, an inefficiency level, this one. Let me put that, let me color it differently, maybe give it a purple. You get. So we have three candles in play. One, let me use the other arrow so that we can all see this clearly. The first candle here, acting as our number one candle, the second one, the green one, and then the third green one. That is an inefficiency. That is a gap. Okay, another gap was formulated. You look at this first candle, then there is a second candle, then there is another candle, the black one. Those are three candles. What's in the middle? Nothing was covered. You get. So let's also label that with a box. So that becomes our second fair value gap. So now we are saying price will always come back to those gaps. It will continue up, but at a certain time it will always come back and clear the dates, clear off the dates on that in those gaps. Now you've seen here price was going up like so, reached certain levels, and then it came back in this gap, and then it continued upwards. So let's see. Let's continue with this example. Now again here, you're seeing, let me get the other arrow that has been helping me to go in. This is our first candle, second candle, and a third one. And now what's in the middle? What's in the middle? A gap that was not covered by any wick. So let me also label that. That's another void or gap. What happened? Price went up, continued up, then dropped where? In that gap. Went back up, came back again to pay off, and then it continued upwards. Let's go. Now here you're seeing all this cut over, this up and down, nothing was left, no gaps there. So there's no need for price to come back in this. This is what we normally call a consolidation. We'll look at that maybe tomorrow. Now what happens? One candle, the second candle, the third. What's in the middle? A gap. So you label that. We say that price will always come back and fill up that and then continue up. What happened next? Price pretended as if it is continuing up, but then dropped and tapped into that gap. That is what we call paying off the debt. And then you continue. You get. So any questions so far? Any questions, people? Anyone with a question or a concern or anything? So these are the two things that we're going to be looking at. Time and price only. And after the computer doing its work, what happens next? It has to show you results or what we call the output. The output happens at a certain time. The output either attacks a certain key high or key low, like lower low, higher high. If not that, it will come back to pay off the debts. What are the debts? Those are the inefficiency gaps. And the right name that the gaps are given, it's called the fair value. It's like you're being fair to the marketplace. You're paying off the debts, your debts clear. So it's providing fair value to the traders. You get. Then it will continue. Now in certain places you're going to see this. There's something we've not looked at. The other second gap. Now for example here, there is this gap. that wasn't paid. This one you can't see. The first candle is here, the second candle, that black candle, you're seeing it, and then the third black candle. What happened? Price just continued down. It's like you're demanding someone who is promising to pay you, but they never pay you. They just continue. You're like, I will pay you. So this is the gap that I'm talking about that wasn't cleared. What happened? Price just continued down and created another gap. It's like the guy just comes and borrows from you, never pays you, and goes and borrows from someone else. So this is the second borrowing, this gap that was left. Comes and then even smiles at you as if he's going to clear your debt. It doesn't. It continues down. You get? Continues down and drops and attacks what? A lower low and clears off that. The guy continues up. Sorry to use Luganda, but and again another gap that was left. So there is someone who was not paid here. And then he promises to do what? To come back and pay in time. And the attacks and comes back and pays this guy. He hasn't paid the first guy, you get? He comes back and pays off this one. Bulungi, you cleared. Continues down to pay off who? Tries to pay him off here. Goes up, comes back down and pay off this greatly. And then what? Continues up. Continues up, leaving gaps and then paying them off like here. These levels. This is another gap and it was paid off. Remember we have our gap that was the first one to be left. Let me change the color to reddish. Now what happens? The moment they do this, they come and pay him off. But when did they pay the guy? The date was left on, when we look at time, November last year. November 3rd, it was a Thursday, 31st October, sorry. That's when the date was left. It wasn't paid. When did they pay the date off? Here. This candle. This is January 2025. It was a Friday, 24th. The date was left on Friday. Sorry, it was left on Friday. This is the candle. So at exactly the same day they will pay you off. Let me label that. Let me increase the boldness of that line. You're seeing that black line? Let me change it maybe to a different color now. Maybe, yeah, that. So there, that gap was left, wasn't cleared on Friday, 1st November 2024. When was it paid? Here, this candle that purges through that gap, this one here. Which date? Let me label that with a line. It was cleared on the exact time, same day, but different year. January, it was a Friday 24th. I don't know whether this makes sense. That's when this guy was cleared off. Then after clearing him off, price goes back down slightly and then purges with momentum with another gap. This one here. Let me label that. That. And what happens? It comes back and pays off that and then continues up. Just continues, never comes back. You get? So then another gap has been left here. This one. We'll wait. I know we'll come back and tap it to either continue or to break the structure. This gap. Now let's look at the other gap and then we wind up today's meeting. Let me see if I can spot any of those gaps. Let me go to NASDAQ. Okay. Here. So when you look here, you will see those gaps whereby the market skips It's like it jumps. You've seen kids skipping ropes in a compound and they are playing. This is what we're meaning. There is this gap here. That is a void. So that is something stronger than this. Than this. Or than that. Let me zoom in so that we can all see this clearly. So that gap is far stronger than any fair value gap that you know. That skip in time, and then the market is like jumping. So this is whereby in reference to our first example of a shop, the retail guy at the shop, and then the guy who comes and then borrows a kilo of sugar and takes it without paying any coin. So this is what we're trying to mean. The guy doesn't pay anything, just takes a kilo of sugar and then promises to clear off that debt at a later date. You get? So that will be considered more powerful than, because now the debt is too strong. The market, however much the market tries to run up, it will come back and then first clears off that. And you can clarify that here. The market tried to push up with momentum here, struggled up and then eventually dropped to pay off that gap and then continued up. Okay. So such gaps, these are what we call inefficiency levels or voids. You will see us using those names or those terms, don't be scared. So those are gaps, for example, here. So why are we bringing up this at the very beginning? If you've ever traded, you've seen this happen, and then you try to enter the trade. Like for example here, you're like, man, now the market is going up. You enter your trade, maybe here, somewhere. You target some levels, and then you put your stop loss somewhere. Maybe the market has left you, but you're like, man, it's going up now, it's going up. What happens? Because of these gaps that were left, price reaches here, and then drops. And then you're like, man, I'm going to negatives, let me close out the trade. So such things, so that's why we say we don't chase price, we don't. If it has left you, just wait. There are reasons why it will come back, and one of the reasons is the inefficiency gaps that were left. For example, this one here, you get that gap. So price goes up, drops, and then continues back, continues up, and then like that. And then there is another one. This one, for which it was also tapped sometime, and then price continued up. And then on top of that, this is a key high. When we label it with a line, look, let me remove this gap. Look, price left it, but it came back and tapped it here. This level. Price came back and tapped it and bounced off that level and continued up. So that's what we're saying. Two variables. People who did some math at primary or O level or A levels, you know what variables are. There are two input unknowns, but here we know the unknowns. It's price and time that are entered into the algorithm, and then it will manipulate and then gives you results. Gives you results depending on those two variables. But the results will either attack the gaps that were left, what we've called imbalances or inefficiencies, or either these key highs or key lows, these levels, the highs, these lows, and then it will continue up or down, hence the market fluctuations. So nothing is random, that's what I want to tell you. So tomorrow maybe we'll show you some research and why the markets came here. So thank you for listening. Allow me to end here. Eh, Bertram, are you having any question, anything? Okay. So I'm seeing Eddie Mond, long time boss. There is Marvo Media, DC, Vega Ibrahim, then Kim's, Maureen, and other members. So thank you for attending. Let me take it back to Alvin to wrap up, and maybe we have a prayer. Thank you very much for listening. We are sorry for things that have not moved well. We had prepared the slides, but we failed to display them here. But they will be provided after this closure of the lecture as PDFs for you to continuously read through and then do research, do revision, etc. So thank you very much. Let me hand it over to Alvin.
Alright, thank you so much. Thank you so much, Mr. Winnie, for the presentation. And I hope everybody has understood whatever has been shared, right? Has everybody understood? Please mute. If at all you're not talking stuff that is going to help us. Has everybody understood? Alright, that's great. So this is how we are going to be doing it. So we had prepared today's presentation on slides, but then they kind of failed. But then it doesn't stop us from pushing. So the point is, tomorrow we are going to have the slides well and clear. So tomorrow, guys, the beginner classes are starting at 10 exactly, 10 a.m. Do not miss. Then the evening classes for the advanced students are starting at 7:30 p.m. up to 9:30. So I just want to see you guys there. I want to see you guys keep on pushing. So the bootcamp has started, and Power is going to keep on showing and sharing you guys information. Top class. So I want to thank you guys for showing up always. So let us humble ourselves, we close off this session. Mighty Father, we thank you for the gift of life. We thank you that we've reached the end. We started it as many as possible, and we've ended it as many. Mighty Father, it hasn't been us by our own strength that we've had to present all this knowledge, but because of the knowledge that you've given us, the wisdom, the understanding, we have gained courage, we have gained strength to present, Mighty Father. We have gained patience to apply all the knowledge that we have, Mighty Father. And today has been the day that you've commissioned on the work that you put into our hearts, Lord Father. Mighty Father, we see greatness. We see, Mighty Father, that we are going to prosper in each and every endeavor as we are doing, Father. Mighty Father, we are seeing each and everybody here understanding whatever is getting taught. Mighty Father, there's no one here that is going to fail in training. There's no one here that is going to be a flop. For as long as you're going to put in the time, for as long as you're going to show up every day, you are guaranteed success 100% in the mighty name of Jesus. We pray that tonight is going to be a blessed night for each and everybody, and we pray that you guys stay well and you guys stay safe. Peace. I want to wish you guys a great night. See you guys tomorrow in the beginner classes at 10 a.m. Amen. Amen. Any questions before we close off?
No question.
You've understood each and everything? Yeah, so for the beginners, we meet tomorrow. I know most of you guys have not understood things here, So we meet tomorrow for our usual classes, So the bootcamp has started. We meet tomorrow. Thank you.
Okay, thank you, sir.
You're welcome.
Great session, guys. Thank you so much. Have a good night.